my conclusion is that spending money to reduce taxes does not work. It's still an expense. No tax rate is 100% of income, but I encourage everyone to deduct all expenses that you're allowed. Encourage you to contribute to an IRA. Consider timing of expenses that affect taxes, and the book goes into a little more detail on some of those things. And then also consider capital gains as a possible, capital gains rates could be higher or possibly lower than your income tax rate, and whether or not you treat income as income or as a capital gain is something that your accountant might be able to help you with, or taking a look at the IRS website. I just went and looked at how they're defining long-term capital gains, and you typically, if you sell an investment, it is looked at as a long-term capital gain if you held that investment for more than a year. But if you if it is part of your business, then it can be treated as business income. And so something like your cattle, if you normally have a herd of a certain number of animals and you are growing that herd, then you are investing in it. But when you go to sell some of those animals, whether or not they are treated as income or a capital gain might be something to research. This isn't a picture of my 55 Chevy. I think that's actually a 57. And but when we talk about diversifying investments, my husband and I bought this old car and spent quite a bit of our hard-earned capital fixing it up again 30 years ago, and it has not been a good investment over time. But this is my investment advice. Invest in what you know well. Invest in what goes up in value. Now that could be a little bit harder to determine. Diversify your investments. So some things you might invest in are land, stock market, securities, metals, futures. Animal and farm futures have become a complicated market, and getting out can be it can be tough if the timing isn't handled just right. Certificates of deposits, houses, that's one of the things my husband and I have invested in is real estate, rentals. Antiques, art, again, what you know. Don't be greedy and don't follow the crowd. Again, that can be easier said than done. So if you have ended the year with a negative profit or loss, you might feel good about your taxes because at tax time you're going to owe less money or maybe even get some back. But the rest of the time, negative profits are not a good situation for the long term. I recommend people be careful. Again, I've seen too many people get foreclosed on, but I've seen even more people get scammed. You are a target, regardless of your age or business or telephone number, you are a target, rich or poor. A lot of these people advertise themselves as going to help you with investments, borrowing, creating wealth, cheating the tax man, inventions, quick returns, farm plans. I know a gal who was a retired farmer. I've known her when I was a farm lender, and she did everything she could possibly do after she retired and raised a whole bunch of cash and wired it to a so-called investor who disappeared as soon as they got the money. Very, very sad. I like Dilbert. I hope you guys like Dilbert. I think he's, obviously I think he's funny. So I couldn't resist this cartoon about the little intern guy who is going to a seminar to learn how to turn his $100 into $1 million, and Dogbert, the workshop seminar instructor, tells him to invest his $100 at 5% interest, which could be hard to find at this point in time, and wait 190 years. And I have to be frank that at least Dogbert was honest about the whole thing. But yeah, there's a lot of people out there gonna teach you how to make your $1 million. So taxes and estates in particular are specialty areas. If you're worth a lot of money, get a good attorney who knows taxes and estates. And there are a lot of attorneys out there that do not know taxes and estates. And please do not consider cashing in your 401k or IRA to buy a tractor or real estate. There are tax avoidance schemes out there that charge pretty high fees to help you avoid taxes on cashing in your retirement money, and that's probably just the opposite of what you want to be doing. So there are lots of different kinds of taxes that are going to affect your cash. And so again, having expert advice and or learning yourself about capital gains. You're probably already paying, of course, income and employment, self-employment taxes, including Social Security and Medicare. Make sure to check your state tax code. In Idaho, there is a production exemption for purchases of tools and equipment over $100 on sales tax. Check into those things, read the details. Real property, of course, your real estate taxes and personal property taxes. Now, the personal property tax limit in Idaho has recently gone up. The value of your personal property has to be over $100,000 for that tax to kick in. And then fuel taxes, whether or not you need to pay the road taxes on the diesel that you use in your farm equipment, or whether or not there's refunds associated with those, are another type of tax to look into. So the biggest deductions that get missed are transportation. When you have to go into town to do business, to buy feed, to go to the bank, even if you do some of your own personal stuff while you're there, that transportation is a business deduction. Your home office, if you use it exclusively, and of course you'll want to get the tax details on these. Entertainment, although not at 100%, and hiring family and your children can be a good tax deduction and a way to teach some of them about managing money. Keep good records, and I know that we mentioned recently about how long you need to keep records. In the state of Idaho, for sales tax purposes, you have to keep those records for 4 years. If you're deducting things like transportation, you need a log of what, where, why, and how much. IRS can be difficult to work with. They can also be very helpful, and they have some publications that I encourage people to look into, such as Publication 225, Chapter 4, which is about farm business expenses. There's another one on just business expenses. And you do not want your farm to be classified as a hobby, and if you have no profit, in 3 of the last 5 years, that is a big risk, and there is paper forms you need to file with the IRS and meet their requirements that you are not a hobby. And a lot of the examples that the IRS uses when they're training their agents about whether it's a hobby or a business are farm related. And let's say that you are have a bull and you're showing that bull, and you have travel expenses and show expenses, and you aren't making a profit. There are rules that you're subject to, and it could, if you get determined to be a hobby, then that could be a problem. This is a list of some other deductions that you don't want to forget about, things like licenses, business loan interest, of course your depreciation, and you might be working with an accountant on some of these things. This is one that gets missed by a lot. The number used to be a lot higher, but it is down to $600 now. If you pay that amount of money to people such as accountants, landlords, subcontractors, you are required to file a 1099 with the IRS and give them a copy. And in order to file the 1099, you need to get them to sign a W-9 providing you with their Social Security number or EIN, plus their name and address. So I encourage you, before you pay anybody, and this is a accumulated total for the year, if it exceeds $600, that when you write that check, you get them to give you that W-9. And then another tidbit they're going to be talking about more in a further class, but don't classify anyone who should be an employee as a 1099 contractor. That is become a high enforcement area with the IRS. I encourage people to be honest on their tax returns, and they are a way to provide evidence to your bank or investor, to buyers if you want or need to sell a business or farm, landlords in case you want to expand or possibly move, suppliers or creditors. So they are a highly recognized form of evidence of income, and also if you pay more into Social Security, you might get more out. So now we're getting into the planning part of this, and we're going to be talking about making predictions. My summation here is that the more you know about your farm, about your production, the more you know about money, the better you're going to do with planning. I encourage people, again, to predict good things and predict bad things, and do the prospects of the good outweigh the bad, and could you handle the bad if that happened? Farming is a risky business. One of the ways to increase your possibility of success is a formal written business plan. Put your goals in writing. Explain how you will reach those goals. What are the numbers? You know, what are your sales? What is it going to cost you? How much cash flow are you going to have? Is the plan feasible?